Hello and a very warm welcome to the New Deals Playbook, Trends and Insight for 2025. My name is Lucille Jones and I'm part of the Deals Intelligence team here at LSEG. Today I'm joined by the Director of Deals Intelligence, Matthew Toole, who's going to run through some of the most recent global deal-making trends. Good morning, Matt.
Morning.
And we are delighted to be joined by Will Ashworth, Global Partnerships Manager at Dow Jones, who is going to talk about the partnership that was announced last year between LSEG and Dow Jones, and some of the exciting new developments in the relationship this year. Hi, Will. Good to have you here.
Hi, Lucy. Thank you. Nice to be here as well.
Great. Before we get started, we'd like to run a quick audience poll just to see who we have joining us today. So on your screen now, you should be able to see the poll question, which is, which of the following best describes your job function? And you should see the following options. They are investment banking, trading, research, private equity or venture capital, corporate, academia, media, and other. Give you a few minutes, a few seconds just to select one of those options. It's helpful to know the profile of our audience. So thank you for participating. Great. Now let's get started.
Looks like we're getting a good mix of many job functions, which is great.
Corporate leading.
Corporate.
Perfect. Right, let's get started. Matt, I'll come to you first. We entered 2025 feeling rather optimistic. We had just finished 2024 on a high note, recording a return to growth after 2 consecutive years of declining M&A volumes. There were really signs that, animal spirits were returning to boardrooms, and, there was an expectation for significant rebound in deal-making activity this year. So is 2025 living up to expectations? What are we seeing so far?
Well, I think I used this a bit last year as well, but kind of the recalculating, kind of buffering, kind of wheel that you sometimes get on your laptop when you're trying to make something work. It feels like the M&A market is right now in that rebuffering, recalculating stage, and has been really for the last 2 years as the economic environment has changed over the course of many different iterations, certainly changes in administrations and even regulatory regimes around the world. And I think deal makers have been in a constant state of assessing, when they can do deals and how they might engage in deal making and capital markets activity, because there has been so much incoming as far as events and other activities that either are kind of driving deal making or having deal makers pull back to assess a new landscape. So I think if we move to the first slide, I can walk you through some of the latest kind of overall details. I mean, you can see, really within LSEG, we have 40 years of M&A data. We can go back many cycles, but really the last 5 years has really been pretty indicative of a pretty dramatic cycle where we saw obviously the pandemic beginning in 2020 and just a resurgence of M&A activity in 2020, late 2020 and into 2021, which, Lucille, was quite unexpected for us. We didn't really know how to assess the world of deal making because so much had changed in the landscape. But we saw record levels of M&A activity, record number of deals in that 2021 year where we had such great kind of environmental activity as far as no interest rates. There was a flush of cash, obviously, around the system. And that obviously led to some pretty dramatic pullback as we moved into 2022 and 2023, as interest rates really rose to levels that kind of as the Fed intended, pulled back on some of that M&A activity. So we've been in this kind of flatline environment, both by value and number of deals, for a good 2 years. And I think, as you said, most people felt that the incoming administration in the U.S. and just, potentially pent up demand for M&A on top of a more business-friendly, kind of administration in the U.S. at least, would potentially spur some activity. And you can see, in March of this year, we had a big spike because, again, I think the news is coming in quite dramatically as far as, optimistic, but then also then pullback, optimistic, and pullback. So right now we're up 19% by value. And there's been a couple of large transactions which are driving that value number, but we are seeing the number of deals down 16%, and that is a 10-year low. And so that's where you get the disconnect between there are some people and some industries and some companies which feel quite confident doing deals, and then the volume of deals where you generally see kind of broad-based increases both by value and number. We've not seen that in this most recent cycle, and I think that has a lot to do with the nuance of the environments where many of the kind of the deals might be happening, whether it be in the smaller mid-market to the large cap space. Cross-border has been an area of focus where we felt that there would be an increase, and we have seen a cross-border M&A up 52% compared to a year ago and a 4-year high. But that has been kind of also pretty dramatic as far as the levels of some of the larger deals driving that number. But the number of deals or the value, but the number of deals also down within cross-border. And then private equity, which has been a pretty commanding part of the M&A environment over the last 5 years, up 29%, but the number of deals down 27%. So the theme becomes quite clear, I think, where we are seeing some big deals. There are people willing to move into this market and make things happen. But also the general volume that we've seen over the course of the last 5 years, as you can see by that purple line, is now kind of on a downward trajectory, actually hitting the lowest month in April in the last 5 years for number of deals. So we're now around kind of peak pandemic levels for the scarcity of the number of deals happening right now. So a little bit of a kind of a mixed message, but one that we're watching quite closely.
Yeah. So while not the sort of deal-making bonanza we were told to expect, and we're definitely down significantly on number of deals, we're still up 19% overall with big increases across cross-border and private equity, as you mentioned. What are some of the key drivers this year? If we perhaps move to the next slide, you can walk us through.
Exactly. So I think, yeah, and then on the next slide, we have some breakdowns by M&A by nation, looking at industries and looking at deal size. Now, the U.S. has always been, the main driver of the M&A market, just by sheer size of the economy and the number of companies. The M&A activity in the U.S. is down compared to a year ago, just down 3%, and kind of basically flat if you look at the bar chart there, and it accounts for 46% of overall M&A activity so far this year, which is down quite significantly. Last year, the U.S. accounted for 56% of M&A at this time in 2024. So although the U.S. has been still a significant driver of the activity as far as the percentage, it is down from some of the historical levels. And you can see some of the other countries in the space here. China having a pretty significant resurgence, but a lot of that number is based on some significant capital infusions from the Chinese government into the banking system. So although it is counted as M&A activity, it is not traditional M&A as you would expect it. So we have been looking for when China might kind of begin to engage again in the market for M&A. The UK kind of in third, also down a bit year over year. Canada, Japan, the UAE. Seeing some significant increases, driven by some rather large transactions. So, the mix between countries is obviously changing a bit as we see some other countries step in, and a lot of that is driven by that cross-border stat of up 52%. From an industry perspective, we see financials leading the way at 21%. That is also driven by some of the Chinese activity in the banking system. If you take those deals out, technology would be the top performing industry, up 35% compared to a year ago, and accounting for 19% of overall M&A. And that has been really the lead industry for quite some time, both by number of deals and by value. But tech and tech adjacent has been such a driver of innovation and just companies looking to kind of potentially reimagine their business, with either a traditional tech M&A activity or kind of tie up, but also you can see companies in non-related tech or in any industry acquiring technology companies. So we saw healthcare companies acquiring technology to further their business and other areas related to that. Energy and power, up 8% compared to a year ago, accounts for 14% of activity, and industrials has doubled compared to a year ago. And there's a number of transactions which are driving, kind of driving that, that industry. I think from a deal size perspective, I spoke about the number of kind of mega deals, and you can see that spike in March on the right-hand side by deal size, where we had, a significant number of deals over 5 billion and 10 billion driving that March activity. But if you can see, there were no deals over 10 billion in February. So that choppy aspect of the market is really at play here. And I think that's one we'll be watching for certainly the remainder of this year, where, the large deals which drive the value are a bit choppy. The kind of the consistent level of mid-market M&A activity is down compared to a year ago. Deals under 500 million are down right now 16% by number of deals year over year. But then the deals between 1 and 5 billion are growing at a pretty significant clip compared to a year ago. So, there's a lot happening in the space. I think some of the bigger deals which you've probably heard of, Google acquiring Wiz, that's the largest deal of the year. That deal has been kind of talked about for at least 9 months or so. There was rumors at the middle of last year that there were some talks happening around that, and I think many companies deciding whether or not to potentially be acquired, or go into talks to be acquired, or potentially go public with a very significant private company. That's the largest deal driving technology. We've seen OpenAI, have some significant investments happening in the world of AI, driving a lot of activity in technology. We saw some M&A activity between X and Elon Musk, and merging together XAI as well as the kind of social media platform X. So technology really being pretty diverse. In financials outside of the Chinese investments, we saw a number of deals around global payments, which obviously a very trending part of the technology world with WorldPay, global payments. And also we've seen some pretty significant bank consolidation in Europe, particularly in Italy with Mediobanca and UniCredit and others. You're kind of really thinking about, kind of when the European bank consolidation story might come together. And that's one that we've been following for I think the overall kind of world is oftentimes focused on public company M&A, and public company M&A right now is down year over year. And so that's a significant one that we watch. It only accounts for 25% of M&A so far this year. So the public company, the big tie-ups that really get the attention is a bit at a lower mark as far as the percentage of deal making. For example, in 2000, public company M&A accounted for 55% of overall activity. So again, there's some interesting things to dig into, things that we're certainly watching, but some challenges certainly in certain industries and certain areas. But then as we see, opportunities can present themselves quite quickly, and as market conditions improve or potentially foster more deal announcements, we'll be watching those for sure.
The deal size chart is really interesting there, sort of the contrast between the first 2 months of the year and then, March and then April. Not a single deal over the $10 billion mark in February, and then 12 in April, which I believe is an all-time monthly record for that size category. So April has been quiet, but certainly something to watch through the rest of the year.
I remember being at one of the kind of deal-making conferences right after the election in November, and everyone was so excited. It was all about credit and lending, private credit, syndicated loans, and I've never seen more of a buzz at an industry conference, because I think there was a feeling that there was so much work to be done on M&A. There was so much financing that could be had, both private, syndicated lending, corporate bonds, and I think that is still underlying, but there's a need for the deal makers and the CEOs and the boards to have the confidence to announce that deal and make it happen, and go through the process of either getting it approved or watching the share price react. And so, again, having that, everyone pull back in February, no deals over 10 billion, then to come in March and have this huge surge, deal making can come back, I think, pretty significantly at a drop of a hat, because the underlying financials and many of the financing activity is waiting to be used to finance those deals. And I think that's one that we'll continue to see. The stock price has been pretty volatile, so that maybe that currency is no longer there, but you can raise quite a bit of capital in syndicated lending, private credit, corporate bonds, and a whole host of other activities within capital markets. And so that is definitely a chart that will continue to update each month as we move through the rest of 2025.
And you mentioned financing there. What about sort of the capital markets? What are we seeing there?
Yeah, on the next slide, we dig into a little bit of capital markets activity, and equity has always been, IPO certainly a big kind of hallmark of the ECM market, and the pace of IPOs is down. You can see in that kind of that purple, over the course of the last 5 years or so, where we have record in 2021 globally for new IPOs. It's a hard time to be marketing your company if you don't know, the underlying, kind of case for your industry or sector or tariffs or any of the buzzwords that we hear right now. It's hard to go on a roadshow and sell your company to go public. We are seeing, deals happen. We had an IPO this morning in New York as I walked by the stock exchange in New York. But I think there's definitely a lot of focus on kind of the market volatility certainly, and the VIX and other areas where it's not really, a real time for companies to be going public. But again, that can also change pretty dramatically based on events and based on, potentially new announcements from companies all around the world. ECM right now is down 10% globally, so down, to a 3-year low. IPOs are down 21% for all IPOs globally. U.S. listings down 31%. And then you can see follow-ons, convertibles also down year over year. We have seen SPACs come back. So the blank check companies, which were really such a hallmark of that 2021 surge, where we saw companies raising capital on the public market to then go and acquire a company. There were 338 of them in 2021, just an unbelievable amount of SPAC and blank check activity, which fell off dramatically as we moved into 2022. But we are seeing a 500% increase by value and number of deals of SPACs. And some of the names like Gores and Cantor and Churchill, which are the kind of the hallmark SPAC companies, are back in the market this year looking to raise money to potentially acquire companies. So that's a little bit of a bullish tone on what might potentially happen. They have 2 years to make an acquisition generally, so raising public capital right now to potentially make an acquisition and combine is definitely something we're watching, and a new part of the ECM mix for this year.
That's really
On the
interesting,
DCM,
actually. It's
yeah, I mean,
sort of a trend that I thought we'd seen the back of.
right. We'd seen, I mean, we spent so much time tracking SPACs and then tracking whether or not they made an acquisition and the industries and you saw some really interesting deals where some of the companies that might not make it through a roadshow, like some of the renewable or sustainable finance companies or some electric car companies, really being able to become public entities because of these blank check companies. And so I was surprised to see. I'd seen some of the headlines, but I hadn't seen the number, and to have a 500% increase was surprising, and to dig into the names that were familiar to us from back in 2021 who have been kind of consistently coming to market. So one thing to watch within that ECM world for sure. On
And
the
you can watch that on our we have a dedicated SPAC page on our Deals Intelligence app in Workspace.
Yes.
For anyone that has it, can watch out for the most recent SPAC activity there.
Yes, for sure. On the DCM side, in an amazing chart, that we've watched kind of build over the course of the last 2 decades here. You can see that huge spike in 2020, where we had just great conditions, obviously very low interest rates. We saw a ton of activity for companies just being opportunistic, coming in and taking advantage of the pandemic environment and the easy money in the bond market. But then we also saw many industries who needed to raise capital to be able to continue to sustain operations during that downturn, particularly in kind of media entertainment, cruise ships, airlines, some of the areas that really needed to use the bond market. So, that all-time spike in 2020 is still there, but, still very elevated levels of corporate bond activity, both investment grade and high yields, down a bit year over year, but still, a very, very, kind of significant market for companies looking to obviously continue to move their finances through and adjust balance sheets, but also for M&A financing. And so we've continued to look at that as a key area of both the high yield and the investment grade market for deal makers. And yes, interest rates are higher, and we are seeing an interest rate focus where the U.S. has been a little bit hesitant to drop rates. The UK obviously kind of moving rates back this morning. So again, the interest rate picture will definitely be fully in focus. I think at any point where you're kind of at a plateau point, and so a lot of the deal makers certainly watching this market as they think about potentially striking deals, both either the private equity side of things or the corporate side.
Matt, thank you so much for the insight. I'm going to just move to Will now. Will, thanks again for joining us.
Absolutely,
So
great to be here.
Last year, LSEG and Dow Jones announced an exciting new partnership. Can you tell us about this collaboration?
Yes, absolutely. It started pre-pandemic and ended post-pandemic, so there was a lot of time in between to get it done with navigating travel restrictions and the like. But we worked with me and my team worked with Leslie Fairchild and Richard Mabley, primarily from the news and content team. Essentially, we bundled all of Dow Jones titles onto the new workspace terminal. So there's about 9 different titles that are available: Wall Street Journal, Barron's, Market Watch, Dow Jones Newswires, WSJ Pro, WSJ Opinion, Investors Business Daily, private equity news, and financial news. So there's a lot of sources that have come onto the terminal.
Brands.
All the leading brands, and this also includes a 400-day rolling archive of content on the terminal as well. We also have 3 local language services that are a part of this deal. So our Chinese language service, our German language service, and our Japanese language service. There is also a bi-directional component to this deal as well, where Dow Jones is buying data and terminals from LSEG. So LSEG workspace terminals will be used throughout Dow Jones newsrooms for all of the titles that I mentioned. And we will also be buying market data off LSEG to display on our various properties, consumer properties.
Fantastic. So workspace enhanced with news and commentary from Dow Jones, and Dow Jones journalists, the newsrooms there having access to all of our content and leading insight to use across your leading brands. 2 brands really coming together, combining their strengths. What sort of value do you think this partnership brings to financial professionals?
Well, I mean, Dow Jones is synonymous with financial markets. So, all of our titles are geared towards this area. Dow Jones has also got a strong legacy of scooping M&A transactions as well. So, for example, a couple of years ago, Dow Jones had 8 of the top 10 M&A deals for the year. So to get that content in real time through the workspace terminal for all of your customers in financial markets will be a huge win for all of your users. All of our articles break first. All of our content breaks first on the Dow Jones Newswire. So that's the real-time newswire. It's the breaking outlet for the Wall Street Journal, for Barron's, for Market Watch, all of those titles that I mentioned earlier. So from a value perspective, certainly in banking, but obviously, wealth, sales and trading, etc. This is the outlet, for Dow Jones where we move markets, and having access to that as it breaks, alongside all of the other sources that you have on the workspace terminal as well. It really kind of creates a huge value prop for your users. And I know how many other sources you have. So the combination of pulling all of this together, I think is a real competitive advantage.
Absolutely. Really combining the strength of 2 global leaders to deliver, you know, the trusted data and news that, you know, our customers need to succeed. Really powerful collaboration. One of the new features is the investment banking scorecard on wsj.com. An exciting new development. What can users expect to find here?
It is a very exciting development, and I can tell you Dow Jones and the Wall Street Journal are thrilled to have a partner like LSEG supply data for WSJ.com, and actually your team also built the experience for us as well. So what can we expect to find there?
Yeah, I think we have a video.
Oh, we have a video. Excellent.
We do have a video coming up. If we could play that now. Perfect. So LSEG's trusted M&A, capital markets and imputed fee data, and industry-leading league tables at your fingertips through WSJ.com. So there it is. It's available from the front page. If you go to markets and finance, the investment banking scorecard is under market data. And there you can see, you know, LSEG and Wall Street Journal, the two brands together. It's great to see. We have the mergers and acquisitions. There's a sort of overview map here. And you can see the most recent M&A activity by region. A little bit further down, we have M&A advisor rankings and quarterly M&A activity. For each of these categories, you have the ability of selecting either global, or you can choose between various different regions, US, Europe, Asia, etc. We have top 5 sectors there as well. And you can select also between year-to-date volumes or last full year, so 2024. Sort of whizzing back up to the top there, you can have the option of moving from M&A to equity capital markets, and the option of overall ECM or just IPOs, and then debt capital markets activity. And again, we separately break out investment grade bonds and high yield bonds. Investment banking fees are also available on here, and you can slightly lost view of it there. Hope you can still see it on the screen. So investment banking fees, and these have a similar look and feel with sort of regional volumes, league tables, sector breakdowns, fee earnings per bank, per sector. And one thing that was really important to us when we were building out these pages was that they would be fully accessible. So you can switch between a chart view or a table view for any of the charts on these pages, so that they're fully compatible with screen reader technologies. The page also displays product mix breakdown and the top fee earners by product, and then quarterly volumes underneath. So really valuable content here in the investment banking scorecard, co-developed by LSEG and Dow Jones, and available now without subscription actually on WSJ.com. So go and have a look. If we could just pause that video for 1 second. So the scorecard isn't the only exciting thing that we have to show you. We also have WSJ Professional Plus. It was launched in LSEG Workspace earlier this year. Will, I wonder if you can tell us about this sort of enhanced news experience before we take a little look at a demo here.
Absolutely. Well, LSEG was or is our inaugural launch partner for WSJ Professional Plus. Of all the titles that I mentioned earlier that we are supplying onto the Workspace terminal, those titles result in thousands of articles and news stories every single day. And often cutting through those news articles is the most important thing. You know, what is a user looking for? What are the most important stories of the day? And that is what WSJ Professional Plus attempts to solve. We have a dedicated group of senior editors in New York who curate content from all of those titles specifically for the WSJ Professional Plus experience. And then it is organized into various different categories on the workspace terminal. So, for example, there's top news, investing and stock picks, events that are driving the markets today, specific highlights from across all of our titles, company news, and we'll see that on the video in a second. But essentially, your users will be being told from a senior editorial perspective, these are the most important stories that have come out of all of Dow Jones's titles today.
Right, thanks, Will. And let's take a look at the video. Perfect. So in Workspace, just search for WSJ and you'll see the Professional Plus app. There we go, WSJ Professional Plus app, perfect. And as Will described earlier, it's a hand-curated display of Dow Jones premium news brands, including Wall Street Journal, Market Watch, Barron's, and more. It's a multimedia experience, so it includes articles, graphics, and videos, and the content is organised into 8 different sections. Will mentioned some of them earlier. So if we click back here, we have this main section here, which is the top news. It's the most sort of important news stories focusing on companies and trends that are critically important to making investment decisions. We also have investing and stock picks, a selection of videos, market driving events, WSJ highlights, company news, US and global news, and a list of the most read Dow Jones news articles in the last 24 hours. So really, enhanced hand-curated news experience, really cutting through the noise to showcase the top news from across the full range of Dow Jones news brands. And it's available in LSEG Workspace right now. Perfect. So I don't think we have any questions. Matt, Will, we're sort of approaching the end of this session, but before we go, perhaps I could ask you about what your expectations are for the rest of the year, what's coming up. Matt, I'll start with you if I may. Are there any sort of key deal-making themes, key drivers that you'll be looking out for the rest of the year?
I mean, I'm so happy to never have to predict what's going to happen in the world of mergers and acquisitions and capital markets. But as I think the buckets that I laid out, I'll be continuing to watch. I mean, certainly, there's a number of areas where consolidation has begun. We know historically that consolidation usually begets more consolidation. So some of the big moves that we've seen so far this year, in the limited time that we've had in the first 4 months or so of the year, oftentimes other people are thinking about how to respond, and so we'll be watching that. I mean, certainly, market conditions will need to support those moves and confidence of business models and confidence of revenue streams and all that. But we do know that the M&A world is certainly has been as I said, kind of flatlining for the last 2 years or so, and generally cyclically we would expect, particularly with the environment that we're seeing, and as I mentioned, some of the lending and capital market support that these deals might have. I think all the buckets around cross-border, around private equity, some of those key sectors, potentially increasing, and seeing more consolidation around what has been announced so far this year. But I think I think we always say, even as the numbers are either down or up, there's always stories to be told within the M&A world. We certainly know that our colleagues at the Wall Street Journal and other areas within Dow Jones are helping to tell those stories as well. So, I think there's a lot to be, kind of looking, potentially not forward to, but looking towards as we move into the end of the first half and into the latter half of this year, as maybe some of the general kind of shocks to the system and to the markets, might, kind of become a bit less shocking, and then some of the advisory work and some of the M&A activity that we've been expecting will begin to filter through the latter part of the year.
Thanks, Matt. And Will, what does the future look like for the partnership? Is there anything else in the pipeline for this year?
There's an awful lot in the pipeline, actually.
Anything you can tell us about?
Yeah, well, yes, certainly some things. I mean, this is a multi-year partnership that we've set up. So it's a long-term agreement, and we've only just started it. So I think the job of Dow Jones is to provide more and more value throughout the course of the term, and that will be, for example, we are looking at expanding our local language services at the moment. So we will have more local language content available, which will come down through to LSEG users. I didn't mention this earlier as well, but there is also, specifically for the deals intelligence part of Workspace, there is a component of our partnership that uses Factiva, where your team mine the Factiva database looking for specific events and rumors and deals that are reported from the global press. So we'll be looking to expand this as well. Other areas that we could think about are generative AI as well, and increasing the functionality of our content on the terminal, sentiment analysis, event detection, things like that, which will all be designed just to kind of provide more value to your users. And then there are also, we're having conversations around other ways that we can collaborate, including events, areas like that. Our teams spend an awful lot of time together at the moment as well. There's always ideas that are coming out of this. And I would say to anybody that is listening as well, if there is anything specific that they would like to see, or if there are any ideas at Dow Jones, we would love to hear that. We're very open to it, and we welcome the feedback. So please do let us know if there's any opportunities that you see or hear from your users that could kind of spell a new way in which we could collaborate.
Thank you, Will. Lots to look forward to. Exciting times. So that brings this session to an end. You will be sent an email, audience members, with a link to the recording and some other materials that and reports that you might find useful. Matt, Will, thank you both so much for your thoughts and insight today. And thank you to our audience for listening. We hope you will join us again soon. Enjoy the rest of your day.